Hello friends, welcome to Power Book Summaries. What's the most important thing in your life? Have you ever stopped to think, how does money impact your life? We all want financial stability, a life of comfort, and the ability to fulfill our dreams. But here's the reality. Most people don't truly understand money. Earning money is an art. Managing money is a science. And if you master both, you can transform your life and secure your future. Today, I'll share the summary of a powerful book that can change both your thinking and your reality. Money, Master the Game by Tony Robbins. This book isn't just another finance guide. It's a blueprint to achieving financial freedom, filled with insights from Tony's 40 years of experience and interviews with the world's top financial experts. It teaches us how to grow our income, invest wisely, and protect our wealth. Imagine knowing the hidden truths of the financial world. How much better would your life be? This book doesn't just talk about making money. It talks about managing and multiplying it. In today's video, I'll walk you through every life-changing lesson from this book. Whether you're a student, an employee, or running a business, this video is for you. So let's begin this journey. Let's learn how to master our money. Watch closely, because what you're about to learn today could completely change your life and the way you think about money. Chapter 1 to 12. Make the most important financial decision of your life. Do you also believe that the only path to financial freedom is to work hard and get a good job? From childhood, our parents teach us, if we work hard, we'll support our family, and our bank account will always be full. But is that really true? The harsh reality is, even after earning a regular salary for years, most people never achieve financial freedom. They work for decades, yet still reach a point where their savings run out. Isn't that frustrating? But don't worry, because smart investing can change your life. So the question is how? Let's understand the power of compounding. Understanding compounding. 310. Compounding is when you let your investment grow without touching it. Each year, interest adds to your principal, and then interest is added on the previous interest. Sounds simple, but the results are extraordinary. Let me share a short story. There were two twin brothers, William and James. William started investing at the age of 20. Every year, he saved $4,000 into his retirement account. He kept doing this until age 40 and then stopped adding more. However, his investments kept growing at a 10% annual return. James, on the other hand, started investing at 40. He also invested $4,000 per year, but continued until the age of 65. So, who had more money by age 65? Let's break it down. James invested for 25 years, a total of $100,000. William invested only for 20 years, a total of $80,000. But the shocking truth: at age 65, James had $400,000. William had $2.5 million. Surprised? That's the magic of compounding. William's early start gave him a massive head start. Even though he stopped investing after 40, his first $4,000 earned 10% interest, which got reinvested and kept growing. The 3 big lessons for 54. This story teaches us 3 powerful lessons. Start investing early. The sooner you start, the better your results. Don't touch your interest, no matter how tempting it is. Let your investments grow. Be disciplined. William consistently saved $4,000 every year for 20 years. You too can achieve financial freedom, just like William, by building the right habits. Start investing as early as possible. Avoid spending your interest, and give your money the time to grow. Just imagine, while you sleep, your money is working for you. That's the first step to becoming a financial master. In the next part of this book, you'll learn how to direct your money toward the right goals and build a better life. But remember, the first step must come from you. So make the decision today. Take charge of your biggest financial decision. The journey won't be easy, but the freedom you'll achieve will be priceless. Are you ready to live the life of your dreams? Chapter 2 to 627. Know the rules before you get in the game. Where should you begin your journey to financial freedom? Do you really need a broker or financial advisor to invest? If your answer is yes, hold on. Tony Robbins warns us. You don't really need these so-called investment experts. Most brokers may look professional, but in truth, they're more interested in your money than your growth. Here's an example. You want to invest in mutual funds, so you find a big brokerage firm. They say they'll manage your money for a small fee. Sounds great, right? But here's the real story. You invest your hard-earned money, but they take up to 60% of your returns as fees. Yes, you heard that right. Brokers don't care if you win or lose. They just want their commission. It's frustrating to know. You're working hard all your life, only to have someone else party with your money. This isn't just your problem. 90% of Americans do the same. They invest in mutual funds and unknowingly lose a big chunk to broker fees. There's over $13 trillion invested in mutual funds globally. Imagine how much of that goes into brokers' pockets. Why do people still fall for this? The answer is marketing. The financial industry has made everything sound so complicated. Most people believe they can't invest without help. They feel lost without brokers, because the media has made the market look flashy and intimidating. Ever seen the movie The Wolf of Wall Street? Leonardo DiCaprio plays a broker who gets rich by playing with other people's money. Parties, luxury, drugs, all funded by your hard work. So what's the solution? Don't depend on others. Become a smart investor yourself. Learn how trading works. Read books. Follow financial masters like Warren Buffett and Ray Dalio. But before you jump in, you need to understand the rules of the game. One of the most important rules? Invest in index funds. Index funds to 930. An index fund is like a basket of top-performing stocks. Take the S&P 500 index fund, for example. It includes America's top 500 companies, like Microsoft, Apple, Facebook, and others. Why choose index funds? They're safer. You're not betting on one stock. They give steady returns, not overnight riches, but consistent growth. No need for a broker. The fund already includes top picks. Know the cost of your dreams. 1016. Let's talk about your dreams. How much money do you think you need to live your dream life? $8 million? $10 million? Maybe even $100 million. Tony Robbins says, you don't need as much as you think. In one seminar, he asked a 20-year-old about his dream life. The boy said he'd need $1 billion to be happy. Tony smiled and asked, what if you actually got $1 billion? So Tony asked the young man, what would you do if you actually had $1 billion? The boy said, I'd buy a private jet, purchase a house in New York, and vacation in the Bahamas. Tony then sat with him and did a quick calculation. A brand new private jet costs around $65 million. But a second-hand jet? That can be rented or even bought for just $10 million. And if you were to simply rent a jet, the annual cost would be around $50,000. The same logic applied to owning a private island. The boy thought he'd have to buy one to live his dream. But when Tony showed him the costs of renting an island instead, he was shocked. Renting significantly reduced the total financial burden. After all these calculations, the boy realized something incredible. To live his billionaire dream life, he actually needed just 1% of that $1 billion. This story teaches us a powerful lesson. To achieve financial freedom, you don't need insane amounts of money. What you need is smart investing, financial clarity, and better decision-making. Understand where your money is going and how to make it work for your goals. That's when your dream life begins. Always remember, this is your life, and it's your responsibility to make it better. Chapter 3. Asset Allocation. The Balance Between risk and security, are you wondering what's the smartest way to reach $10 million in wealth? It may seem like a mystery, but the solution lies in one proven strategy: asset allocation. Think about this. What happens if you keep all your eggs in one basket and that basket falls? That's exactly what happens in the investment world when people put all their money into one place. Tony Robbins emphasizes, don't put all your eggs in one basket. Instead, divide your investments across different asset classes: stocks, bonds, real estate, and commodities. This doesn't just reduce your risk, it also brings diversity and long-term stability to your portfolio. Still not convinced? Let's understand it with real stories. One of Tony's friends invested all his money into a single company, let's call it L Corp. He believed it was a safe bet since the company was huge and successful. But just a few weeks later, the company's stock price crashed. He was left with nothing. Why? Because he put all his money in one place. Another example: a TV executive gave up her high-paying job to follow her dreams. She sold her luxury flat in Los Angeles and used all the money to start a restaurant and invest in high-risk bonds. At first, things went well. But when the 2008 financial crisis hit, she lost everything. She had to start over as a freelancer. Scary stories, right? Because they're real. So how can we avoid this kind of risk? The answer is asset allocation, splitting your investments between security and growth baskets. Let's break this down. 1. The security or peace of mind basket. This is for people who want to sleep peacefully at night. Your money grows slowly here, but with higher safety. Cash or cash equivalents. Keeping money in savings accounts is crucial. In times of financial crises, like in 2008, this is what saved many people when they couldn't sell their stocks. Bonds, also known as fixed income investments. You loan your money to a company or government and earn interest in return. CDs, certificates of deposit. You deposit your money for a fixed period, and in return, you get guaranteed interest. However, early withdrawal can be tricky. Life insurance policies, a must-have for protecting your family. Life is unpredictable. But with insurance, your loved ones stay secure. 2. The risk or growth basket. This is for people willing to take calculated risks. The rewards can be high, but so can the losses. ETFs, exchange-traded funds. A group of stocks you can trade like individual shares, more flexible than mutual funds. High-yield bonds, junk bonds. These offer high returns but with equally high risk. REITs, real estate investment trusts. These are companies that own income-generating properties. Investing in them gives you exposure to real estate without having to buy property. Gold, silver, oil, and commodities. These assets help diversify your portfolio and hedge against inflation. Gold, especially, is known for stability during economic uncertainty. When it comes to investing, it's not just about growing your money, it's also about protecting your future. Asset allocation is the key that teaches you how to balance safety with ambition. On one side, peace and stability. On the other, growth and adventure. The journey won't be easy. But with the right asset allocation, you can not only chase your dreams, you can protect them too. So ask yourself, which basket are you putting your eggs in? Be smart, stay protected, and turn your dreams into reality. Chapter 4. The all-season strategy. Have you ever feared losing your hard-earned money in a market crash? Worried that economic chaos might destroy your financial stability? Let's solve that today. Tony Robbins introduces a strategy that keeps your portfolio safe and profitable in all market conditions. It's called the all-season strategy, created by Ray Dalio, the founder of Bridgewater Associates, the world's biggest hedge fund. But this is more than just a financial strategy. It's also a story of life experience and hard-earned lessons. Back in 1971, Ray Dalio began working as a clerk at the New York Stock Exchange. The U.S. economy was in crisis. Inflation and unemployment were at record highs. Then came the 1973 oil shock. Prices skyrocketed. The government launched odd-even gas rationing. Long lines formed at stations, and political chaos added to the mess. Ray observed how rapidly the stock market was rising and falling. Curious and determined, he started studying deeply and eventually developed the all-season strategy. This wasn't guesswork. It was based on solid research. Let's look at the numbers. If you had followed the all-season strategy from 1974 to 2013, your investments would have grown at 10% annually on average. In 40 years, only 4 years showed losses, and the average loss was just 1.76%. Even during the catastrophic 2008 crisis, when most portfolios collapsed, the loss under this strategy was only 3.93%. Incredible? Maybe, but it's not magic. It's a method grounded in balance and diversification. So how does it work? Ray Dalio designed the All Seasons portfolio to thrive in any economic condition, whether inflation rises, the economy shrinks, or markets stagnate. Here's the breakdown. 30% in stocks. This part fuels your growth. Stocks are riskier than bonds, so they're kept to a smaller percentage. Use S&P 500 index funds to minimize risk. 40% in long-term bonds and 15% in intermediate-term bonds. Bonds bring safety and stability. Intermediate-term bonds mature in 7 to 10 years. Long-term bonds can go up to 20 to 30 years and act as a cushion during economic uncertainty. 7.5% in gold. Gold protects against inflation. When markets shake, gold typically rises. 7.5% in commodities, like oil and silver. Commodities add balance and shield your portfolio during economic shocks. When you invest, it's not just about money, it's about life, peace of mind, and legacy. The all-season strategy helps you ride through every economic wave with strength and confidence. Another key part of the all-season strategy is something called rebalancing. Over time, some investments will perform better than others. For example, if your stocks grow more than your bonds, your portfolio may become unbalanced. In that case, you would need to sell a portion of your stocks and move that money into bonds to restore the original balance. This process helps you avoid unnecessary risk and keeps your portfolio stable and healthy. Now imagine it's 2008. The global financial crisis is unfolding. Markets are crashing. Panic is everywhere. Investors are losing sleep. But you're calm. Why? Because your portfolio is built on the all-season strategy. You know you've invested in long-term bonds and gold, assets designed to withstand downturns. Even in chaos, you're protected. That kind of peace of mind, that confidence, is the real power of this strategy. The all-season strategy is not just an investment plan. It's a mindset, a way of staying calm, focused, and steady, no matter what life throws at you. It gives you financial security, yes, but also mental peace. So, are you ready to build a portfolio that's ready for any season? Adopt this brilliant strategy by Ray Dalio and protect your financial future. Because true investment success isn't just about making more money, it's about maintaining stability and peace of mind. The book, Money, Master the Game, teaches us that by making wise financial decisions, we can achieve not just financial freedom, but also a life that's stress-free, independent, and fulfilling. Tony Robbins doesn't just talk about making and saving money. He shows us how to protect it, how to reduce risk, and how to make it grow smartly. The book shows that becoming wealthy doesn't require a big salary or a lucky start. What you need is clear thinking, patience, and a solid strategy. By adopting principles like diversification, rebalancing, and compounding, anyone, yes, anyone, can achieve their financial goals. Tony Robbins' most powerful message is this: Money is a tool, a means to an end. But to use it well, you must spend it with purpose. This book not only offers financial education, it also teaches us how to live a happy, meaningful life, one that goes beyond just money. In the end, Money, Master the Game makes it clear. Financial freedom is not just a dream for the rich, it's a right for every person. But for that to become your reality, you must take the first step. You must create a strategy and follow it with faith and discipline. Because even small steps taken today can lead to huge achievements tomorrow. So start now and take control of your financial future. Thank you for watching Power Book Summaries. If this video helped you understand how to build wealth and protect your future, then make sure to like this video, share it with your friends, comment below what you learned, and subscribe to our channel for more life-changing book summaries. Stay empowered, stay financially free, and we'll see you in the next summary.